Sometimes make it easy around here. Cisco shares moving higher, sharply higher. Company reported another strong quarter thanks to the AI boom, but also to the traditional business. Joining us here at Post 9 is Cisco Chairman and CEO Chuck Robbins. Chuck, first of all, congratulations. I know you just came back from the Gulf, and you came back with a slew of orders.
Well, thank you, Jim. We appreciate it. We're really pleased with where we are right now. We had a really good quarter. The team executed really, really well, and in particular, on the AI front, we started talking about investing in this space a few years back in the web scale space with the silicon investments that we're making, and they're paying off right now. And to your point around the Gulf, yeah, I was there last week since I couldn't be there this week. Our newly promoted president, G2 Patel, is in the region this week representing us and has done a great job. But yeah, we've got a lot of great stuff going on over there.
Could there be almost like a hyperscaler when you put all those countries together?
I think that's the plan. I would expect what we announced with HUMAIN and Saudi will look like one of the U.S. hyperscalers at the end of the day. It's going to be big.
But I don't want to short shrift the regular business was strong. Now, my colleague David Faber was earlier talking about stocks that are highly inflated in terms of the price earnings multiple. You have a 16 times earnings, but how many different quarters have you beaten? And this is probably the biggest beat I've seen of your career.
Well, I think we've been on a bit of a run relative to expectations for the last couple of years, but it's you said it. If you look at our enterprise, even our enterprise networking business, our campus switching business was up on high single digits. Our enterprise routing business was up in double digits. Sequentially, there's a new technology in Wi-Fi called Wi-Fi 7. Our orders from Q3 over Q2 were up triple digits, and in the web scale space, as we talked about, it's a third consecutive quarter of triple-digit order growth there as well. So
no, it's great. Now, I do want
to get telco was up, cable was up. I mean, all these.
No, these are cybersecurity. The Splunk order is good. Before I turn it over to my colleagues, one of the things that you talked about, I met with you with Jensen Huang and Nvidia. I'm sure there's probably there's some ill-advised analysts who didn't realize that there could be some very big orders coming from that, but they didn't flow through this quarter. But that partnership with Nvidia is a good one.
It's a great one, and we haven't really delivered the solutions yet. That's what we were talking about on the call. A lot of that begins to roll out in about 60 days from now, and some of that's their development effort, some of it's our development effort. But we've got a multifaceted partnership. I talked to Jensen last week, and he's already talking about let's figure out what the next thing is that we can do together. And so he's full of energy,
As for overall industry, AI infrastructure, CapEx, it doesn't sound like you think we're going to peak this year.
It sure doesn't feel that way. Doesn't feel that way. I think this is why, even in the midst of macro caution, I think that this transition is so big for all of our customers that they're not going to slow down unless they're absolutely forced to at the end of the day. Because they're concerned about falling behind. They're concerned about what their competitors might do. They're trying to make sure that they're taking advantage of this technology to gain productivity, improve customer experience. I mean, there's just so much positive from this.
Was there any moment in April where the macro caution you felt could ding some of that momentum?
It didn't. It never happened. And
and across the rest of your business too. I mean, that was because we've heard so many CEOs talk about uncertainty and perhaps a desire to sort of just wait it out, and yet that doesn't seem reflected in your numbers. Now, AI kind of is its own thing. I get it.
It is.
But in the other part of your business,
flowed through to revenue really yet.
Right. But on the other part of your business, you didn't see any real pullback either, did you?
We haven't. I mean, we saw a little weakness in Europe, a little bit. I mean, if you look at our organic order growth rate, the Americas was 12, Asia was 10, and Europe was 1. And if you really look inside that, it was UK public sector, Germany public sector, and France in general had a tough quarter. But I mean, do you read anything through to that? I don't know. I don't think so. I hate to be effusive because I am aware of the uncertainty, and I'm certainly aware of the macro pressure and the potential, and the way that the information we're dealing with changes daily, hourly, weekly, and so it's something that we're paying attention to, and I'm not suggesting it can't change, to be clear, but we haven't seen it yet.
Yeah, things can change quite
very
quickly. I mean, on the call, you made the point a couple of times in terms of AI. It's nonlinear.
Yeah.
Well, what are you trying to tell people by saying that?
These are big customers that place big orders, and then they digest the big orders. And so you can't, if you look at it one quarter at a time, then you may see you may see some data and you come to the wrong conclusion, right? I think in Q2 we took $350 million worth of orders for AI infrastructure. Q3 it was 600 million, over 600 million. Right. So they're ramping, and this is an area, as we talked about a lot. When I took over, we were nowhere in the web scale space, and it took us years to get the products to where they needed to be, and so this is pure share gain for us.
Right, and again, I mean, no let up that you're aware of or seeing or expect, I guess, even though it may be non-linear in that way, but ultimately it's higher.
No, we have, I mean, unless they throw us a curve, the beauty of these customers is you have a long view to what they're going to build out, because you get design wins, and then you actually go work on the chips, tweaking the chips, or there's a new chip that isn't quite finished that they want to have, and we have to do all that work. Then we got to get in their labs, and so you get a design win, and it's 9 to 12 months perhaps before you begin to see that actually get implemented in their network. So you have a lot of long-term visibility. Doesn't mean they can't change their plans, because they do. As the market moves, the market shifts, they change their plans accordingly. And so, but it's a great place to be.
China, anything to add on? Is the picture reflected around the world there?
We had a strong quarter in China.
Come on.
And now it's literally 1% of our business now, so right. It's not super meaningful, but and a lot of that is multinationals that are shipping equipment in to support their network infrastructure. I'm not suggesting that things have changed relative to our position in China, but. So I'm not a good gauge of the economy in China.
But your own comments about uncertainty and how quickly things can change, and obviously we've seen that in the last 30 days. Yeah. Do you position the business any differently, or are you making decisions any differently in terms of given that environment? We're
maintaining flexibility, as much as you can. But we're like everybody else. I was talking to analysts last night, and they were asking about operating margin leverage, and I'm like, with all the opportunities we have right now, with everything going on, with the Splunk integration and cybersecurity and this AI thing, this is not a time to cut investments. We're actually investing more in silicon, more in cybersecurity, more in AI, right now.